Okay. What is an ESG score and how does it impact the average consumer, me? So ESG is kind of a movement in financial markets, in culture, it's kind of a trend that they've created mutual funds around this term. And ESG stands for environmental, social, and governance. And it's a score that was, and I don't even know exactly where the origins come from or who defines it, but basically like they score companies on key measures across environmental causes, like how eco-friendly and green is this company? And there's different metrics that they use to assess that score. Then they look at like social causes. It may be things like, how many women do they have on their board of directors? How many minorities have they hired and have in leadership positions? Things like that. And so they'll have a score on those measures. And then the third measure is one that I think gets talked about far less often, but is one that is coming to the forefront in some of these recent scandals, and that is governance. Governance means like what are best practices in governance? Things like having an independent board of directors, things like having not multiple share classes. So every share has the same equivalent vote versus, there are some companies where founders own a different class of shares that get 10 times the vote as the other class of shares that everybody else holds, for example. And that would be a poor governance structure. So governance is another element, and they score companies on that. And so then what has happened is companies that have higher ESG scores might get, attract more investment than other companies. That has been sort of the goal. However, there are also failings to this ESG score. And what do I mean by that? Well, just like anything, right? Once you find a metric, people find a way to game the system. And so that's kind of some of what has been going on. So like if you looked at certain companies within kind of these ESG funds, like how is a company like Exxon, right, classified as an ESG company or that has a high ESG score? And so there's some things that just like don't quite make sense. And then there's also sort of an argument of like, is that serving, we talked about, I'm trying to think when it was, maybe last week or the week before, kind of the fiduciary obligation of companies. I think it was in the context of inflation. People were saying like, should companies be raising prices in the current environment? And we talked about how a company's primary fiduciary responsibility is to shareholders. So if achieving all of these ESG metrics is at odds with fulfilling your primary fiduciary responsibility, like, is that a good thing? I would say most of the governance metrics are a good thing. Some of the other metrics, I would kind of put a question mark as to whether that is a company fulfilling its fiduciary obligation or not. And so that's been where there's some debate around this. But that's what it is. In terms of how it impacts you as a consumer, which is the second part of your question, that is a great question to be asking, because some of these initiatives can be costly, right? Like if you're an energy company and you're buying carbon credits, that has an impact to profitability. It also could potentially cause higher prices to you as a consumer. Now, whether that's good or bad can depend on your perspective of kind of where you sit on various policies and perspectives. But in general, on the E side of things, some of those measures result in higher costs to you as an end consumer. On the social side of things, in my personal opinion, like I would like ultimately the world to be a meritocracy. And so the best candidate for a job is the best candidate for a job, kind of regardless of what you look like, who you are, where you come from, what your religious beliefs are, et cetera, et cetera. Obviously, we've had biases in the world for a long time. And so some of these social measures are aimed at correcting that. And so whether or not that is a good thing for you as a consumer or not kind of depends on the situation. And then the governance piece of it, I would argue most of those are in your best interest, both as a shareholder and a consumer. But that's what it means. Those are the different kind of factors at play. It's on my list of things to write about in more detail to give you more specificity about what some of those metrics and benchmarks are, especially the governance piece, because the governance one is one that's coming up a lot. Like it came up a lot when we were talking about like the Twitter deal. and the fact that like now many boards of directors who are independent boards of directors, they have very little ownership stake in the company. They're being highly compensated by the company as a director. And so how does that align their interest when it comes to voting for a deal that's in the best interest of shareholders, which potentially means voting themselves out of a job? Whereas if they were large stakeholders in the company, large shareholders in the company, they might vote differently. Another example of weak governance, you could argue, is this whole FTX situation, where in my experience working in private equity and growth equity investments, most VC firms historically have not put sizable amounts of money into companies without demanding board representation. And here we had a scenario where there were no board meetings, there was no board of directors, there was no oversight, there were no audit. Well, there were audited financials, although I would put a big question mark next to who that auditor was and what those actually meant. And so you could see in many ways where this whole FTX situation was a failure in corporate governance. And granted, they weren't public yet, so their governance standards may not have been as high, but they should have been pretty close, especially with some VC investors in there. So anyway, we'll put that on my list of like things we should talk more about, and maybe even do have a lawyer come on for a deep dive topic on the podcast, because I think it's something that is going to become more and more relevant as time goes on. And some of the failures and headlines we're seeing right now are coming from especially the governance portion of kind of that ESG topic. Okay.